Hello traders, today we want to discuss how to forecast the fifth Elliott wave like the Elliott wave expert. Alright, how to forecast the fifth Elliott wave like the Elliott wave expert. Alright, so you have been using the Elliott wave, you counting wave, you know how to count waves. Now the next stage is to be able to forecast the financial market, to forecast the next price move before it even takes place. This is the progression, alright, of an Elliott wave a student, alright. So in this tutorial, I want to show you how the Elliott wave forecast, the Elliott wave expert forecast or predict the end of the fifth wave. I have already recorded videos in the past when I was showing traders various methods that they can use to forecast the end of the fifth wave, all right? Using, for instance, Fibonacci extension, using, for instance, the Pitchfork tool. There are many other ways traders can forecast the fifth wave. In this tutorial, I want to show traders how they can use the Elliott wave channels or Elliott wave channeling to forecast the end of the fifth wave. One more time, for traders that have been following us, allow me to say to new traders that the wave forecast, is an expectation, is not an exact science, it's a guide that we follow, it's something that is helping us to expect a price to behave in a certain way. But we do not just buy or sell straight away, we wait for confirmation. So the price will, when we see the price fulfilling, so to speak, our expectation, we can take advantage of it, all right? So if you are expecting the fifth wave to end somewhere, you will draw a line there, and you will expect the corrective first to start at the end of the fifth wave, all right? But as I also told traders before, allow me one more time to say that when we learn something about Elliott wave, we don't want to forget it. Elliott wave analysis is about multi-talented trading. So there is another Elliott wave rule that stated that there is usually equality between the first and the fifth wave. So talking about the length, all right, and the magnitude of the first wave. So you see here we have the first wave. So if you are predicting the fifth wave, we can expect the fifth wave to achieve at least the length of the first wave, or to achieve the magnitude, talking about the price move from the low of the first wave to the top of the first wave, talking about the height of the first wave. We can expect, equality between the first and the fifth wave, either in length or in magnitude. All right, this is one Elliott wave rule, that there is usually equality between the first and the fifth wave. But with that, we can also have a bit of idea how the fifth wave is likely, to form. We also know something else, is that if the first wave and the third wave are not extended, there is a high chance that the fifth wave will be extended. With those information, with those knowledge, we can have a bit of idea what will happen during the fifth wave. We also understand that if the fourth wave has been prolonged, talking about the time it takes for the fourth wave to form, there is a high chance that the fifth wave will be extended. All right, so those are things we already know, that we have already discussed, and we don't want to forget them when we are looking at something else today, talking about Elliott wave channels. All right, very important. So let's move on. Very simple. How do we forecast, the end of the fifth wave using the Elliott wave channel? The first thing that we need to do is to connect the low. So here I draw on my chart. So I will draw first, and then I will show you on a chart, all right, what's happening in a real time, practically speaking, all right, what is happening, so you also can know it. Because on this YouTube channel, what we are trying to do, there are a lot of traders that already know about the Elliott wave theory, but they are struggling when it comes to practical application of the wave principle. And we want to help those traders, So So I draw on my chart, first wave, okay, follow my cursor, first wave in green, second wave in red, third wave in orange, and fourth wave in red here. So now, suppose you were here and you want to know where the fifth wave is likely to end, all right? So what you need to do, very simple, you connect the low of the second wave and the low of the fourth wave. That's the first thing that you do. And then you draw a line through those two lines. So connecting the low of the second wave and the low of the fourth wave, the corrective waves, all right? So you connect them, you draw the first line, which is the line that I draw on this chart. I'm going to change the color of that line into dark green, all right? Here it is. That's the dark green line. That's the dark green on my chart. Here it is, all right? So we have it now. The next thing that we need to do is to draw another line at the top of the third Elliott wave. That line should be parallel to our first line. So the first line that we have drawn is this one here. Now the next step is to just choose the top of the third Elliott wave, draw another line that is parallel to our first line. Okay? All right? So this will stick in your mind, because if you get this message through my drawing here, when it comes to real chart, you understand everything. All right? So we are now in the classroom, okay, explaining how we can forecast the end of the fifth wave. So once we have the channel in place, so by drawing one line to the lows of the second and the fourth wave, and selecting the high of the third Elliott wave, drawing another line that is parallel to the first line, we have a channel. You see my green, dark green channel on my chart, all right? Now, when the fifth wave is underway, we will expect it to end somewhere on the edge of the top of the channel. So this is one simple way to have a bit of idea where the fifth wave is likely to end. Remember that the fifth wave can be extended, which means it can break above that channel. So the minimum expectation, talking about forecasting the end of the fifth wave, is somewhere on the edge of this channel. But if the fifth wave is extended, it will go above it and continue to go up more. All right. So this is about being a multi-talented Elliott wave analyst, understanding the correlation equality, okay, the rule about equality between the first and the fifth wave, when the fifth wave can be extended and everything else. We want to bear all those things in our mind when we are using the Elliott wave channel, all right? So as the fifth wave is underway, we will expect it to end somewhere on the edge of this channel, all right? But it can break above it if the fifth wave is extended, all right? So very simple, but also powerful. I have not yet finished. There's one more trick that you need to understand, is that once we have a channel, this is what I say to traders all the time, whenever you see a channel like this, even if you don't want to draw the median line, just be aware of the median line. So here is the median line, the middle line of my green channel. Sometimes the fifth wave may not go all the way to touch the top of the channel, but we'll find a resistance on the edge of the median line of the channel. All right. Remember that there is one scenario when the fifth wave may not go above the high of the third wave. That's what we call truncation. I've already talked about truncation. That's why I'm saying to you, when we learn something, we don't want to forget it. And when we are applying one strategy, we don't want to forget everything else. So remember the truncation. There are times when the fifth wave may not go above the high of the third wave, but will be lower than the high of the third Elliott wave. But generally, in theory, when we are forecasting the end of the fifth wave, we are expecting using the Elliott wave channel. As I told you, there are many other ways we can forecast, okay, the end of the fifth wave, like Fibonacci extension, pitchfork tool, and so on and so on. All right, but using the Elliott wave channel, we will expect it to end somewhere on the edge of the channel. But do not go ahead before the price. So you want it to hit it and start going down before you can even pretend that a correction has begun. That's the best approach. But this will help you to have a bit of idea when you are buying at the beginning of the fifth wave, where you should take profit. The first place to take profit is near the median line. The second place on the edge of the channel. The prime may, if the fifth wave is extended, it will go above that channel. And if it goes above our channel that we have drawn, we will use something else. This is about multi-talented trading, what we call market geometry. Okay, traders that have been following, I already know this. We measure the width of this channel and we project it to the upside of the channel, and we draw another line at the end of this. You see, this is the width of that channel, and we draw another line from this point that is parallel to our channel. So here it is. So we project the width of our channel above it, if the price breaks above it, and then we draw a line that is parallel to our channel. This is about, okay, you see here it is, this line here. I'll color it also into dark green. This is the projection of our first channel, all right? Are you following me? So we have now two channels. The top channel, the channel at the top is equal in size, okay, to the first channel, all right? And at any point again, you will always remember that there is always a median line. So as the fifth wave, if it's being extended or is quite strong, it may break above, okay, that the first channel, and the first, if it breaks above it, our first minimum target is the median line of our second channel, and our ultimate target, the edge of, the second channel. We will do exactly the same thing in a downtrend, connecting, okay, the top, okay, in a downtrend, that will be the top of the second wave and the top of the fourth wave, all right, in a downtrend, because those are contra trend in a downtrend top, all right, connect the top of the second wave and the top of the fourth wave in a downtrend. You draw the first line, and then you select the low of the third area wave, drawing a line that is parallel to your first line. And then if the price break below your channel, you project that channel equal size, using again market geometry to determine how far. So what we are doing, all we are doing, very simple. We just want to know where are the resistance level for the fifth wave. So as the fifth wave is starting here, the first resistance is the median line of our first channel. The second resistance is this one here, all right? And if it breaks above it, it's the median line of our top channel. If it breaks above, you want to know where our resistance level, because if a financial instrument is going up, it's looking for better resistance level. And we want to know where our resistance level. By drawing those channels, using the area wave channel, we can have a bit of idea where the fifth wave is likely to end. One more thing, my friend. Last time I recorded a video about how to improve a simple method to improve your area wave trading. Very often, now that we are talking about channel, what usually takes place, trader will forget the horizontal resistance. There are also horizontal normal resistance. You see, horizontal resistance. Be aware of the resistance also. This is very, very important. So when we are applying the area wave theory, okay, we don't want to forget the basic market principle. Price going up, looking for better resistance level. There are horizontal resistance level apart from the channel and the median line. All right. Is that helpful to help you to know, to have a bit of idea, okay, where the fifth wave is likely to end? So we can also forecast when the fifth wave is likely to be extended. We talk about it. There are videos already at 2-4 area wave YouTube channel, all right? So check out those videos. There are playlists. I created a lot of playlists now. Check them, and in your own time, try to learn. So talking about becoming an area wave practitioner, that the first stage is to learn the principles. All right, you want to understand the area wave principle. All right, and then now the next stage is to apply the area wave principle to forecast the financial market, to analyze the financial instrument, to have a bit of idea what is likely to take place or what has already taken place. All right, but in all cases, we are not using the area wave as a science, thinking that, this is exactly what will happen. We will pay attention to the economy news, all right? Economy news, we can change the dynamics of area wave trading. A lot of area wave trading have been dumping money in the financial market just because they refuse to combine the area wave, technical analysis with the fundamental. Just refusing to do that is costing a lot of traders a lot of money. The next thing is that traders are violating, the basics or the basic principle of the trading triangle: the market first, the sector before the individual financial instrument. So we have been talking about this all the time, and I'm talking about it again. Don't think that, George, you are repeating yourself, because there are new group of traders always joining our channels, new subscribers coming in, daily, and we want to mention that to those traders. So if you have been following up for some time, you may think that, Joe, you said it before, you are saying it again, but I'm not speaking to one person, I'm speaking to different type of traders, and throughout, okay, the years, all right? So other traders will come later and watch the same video, and they are watching it for the first time, they want to be aware of it, so they don't repeat the same mistake. So this is how we forecast the end of the fifth wave. So you may say to me, Joe, suppose you were here, so you were here, you were counting waves. So you see, all right, well, like I said to you, the area wave count is dynamic. So you were here, you say, okay, oh, maybe this is the first wave, so you label it as a child. You say, oh, this is the second wave. You say, oh, good. Okay, now this is the longest wave, this is the third area wave. Now you are here. Suppose you were here. And you say, all right, now I counted first wave, second wave, third wave, fourth wave. And you want to know where the fifth wave is likely to end. You will connect the low of the second wave and the low of the fourth wave. That's the first line, okay? All right? And then you draw a line to the high of the third area wave that is parallel to the first line. All right? And now, you are expecting, as the fifth wave is underway, which is supposed to be the fifth wave, all right? You will be expecting it. The first resistance will be near the median line, and the third resistance, the first resistance near the median line of this channel. So if I draw the median line of this channel that I'm having now on this chart, that will be somewhere here. Is that a median line? Here it is a median line, okay? So you see how it is stopped on the median line. Though this has nothing to do with the multi-wave here, you see it's stopped on the edge of the median line. So if you were buying here, you will be watching this level. You know that possible, okay, change, okay, here. So you find a resistance, okay, you see here, pull back, but it couldn't break below this low, which indicating to us that the bearish momentum is not as strong as we are expecting because it failed to form a new lower low. So the bullish momentum is intact. The bullish trader do not want it to go below this low. So now the price went down after a double bottom chart pattern. Here it is forming, okay, the first higher low. This is a high probability trading setup right here on the 4-hour time frame. Okay, here it is. There is the CCI period 14 turning around the zero line. Okay, it's a high, nice, beautiful trade here. It went up. So, but let's go back to the subject that I'm talking to you now. We are talking about how to forecast or predict the fifth area wave. So here it is. So you see, it stopped here. So your expectation that first resistance, the median line, second resistance, the top of the channel. If it goes above it, what do you need to do? Market geometry. You measure the width for your first channel. Here it is. By the way, if you want to know more about the market geometry, check out videos about market geometry by Day Pro Traders YouTube channel. Okay, so then you measure the width of that first channel and you project it up and you draw a line that through, okay, that is parallel. So this is the end of the width. You draw a line to that point that is parallel to the first channel. You also remember the median line. So if it breaks above it, you are watching the resistance ahead. Do not forget the normal horizontal key levels that are also resistance levels ahead. All right. So it makes sense. So here, if I start here, you see first wave, second wave, third wave, fourth wave, fifth wave. Now I see here, I say, all right, it's finding a resistance here. The common center line is kaput. I'm on a 50-minute time frame. I will implement a top-down trading method straight away. All right. So 4-hour time frame, 50-minute time frame for the signal, and 3 or 5 minutes for the entry. I'm taking it down from the edge of the median line, first support level, the lower part of the channel, breaks below. Now you see here, it breaks below our first channel. Okay, you use market geometry. The width of our channel is here. Because it breaks below it, market geometry, you project the width of that channel in the direction of the price. Okay, and then you draw a line that is parallel, okay, to the first channel, to the edge, okay, as we have done at the top. We are doing a same thing below. So because you are combining all the time, the market geometry is a powerful tool for those who are using the stochastic, the RSI, the technical indicator. Use market geometry with technical indicators and you see that you get a better result. So here it is pulled back to the edge of our projecting channel on the lower side. Okay, see here on the edge. This is the width of am I changing it? All right, the width of our channel. We project it down and then we draw a line to this point that's parallel. So you see here, pull back. Then if first, so you saw it here, minimum target, the edge of the lower part of the channel, come out. Okay, here it is. Now again, you have a channel here. Remember the media line. All right. So this is how the Elliott wave experts are forecasting the end of the fifth wave using Elliott wave channel. But as I told you before, there are many ways that we can forecast the end of the fifth wave. Talking about the equality between the first and the fifth wave, we can have a bit of idea whether the fifth wave will be extended if the fourth wave has been prolonged, or if neither the first and the third wave are extended. There is a high chance that the fifth wave will be extended because one of the impulse wave, talking about first, third, and fifth wave, will be extended. So if the first and the third are not extended, there's a high chance the fifth wave will be extended. All right. So if there is a question, something that you do not understand, okay, this is your time. Go to the comment section, ask a specific question, say something, I'll read the comment, and then okay, another day, I may record a video that may clarify what you are talking about. Okay? We are the GSTW24 traders talking about how to forecast the fifth wave like the Elliott wave expert. Very simple. Connect the low of the second wave and the low of the fourth wave, draw a line, select the high of the third Elliott wave, draw another line that is parallel to the first line. Now you have a channel. The first minimum target for the fifth wave is the median line of that channel. The second target is the top of the channel. If it breaks above the channel, we use market geometry by measuring the width of the first channel on the upside. We'll do the opposite in a downtrend. We'll connect the high of the second wave and the high of the fourth wave. We draw the first line, and then we select the low of the third Elliott wave, drawing another line to the low of the third Elliott wave that is parallel to the first line. Now again, we have a bearish channel in the downtrend, and if the price break below that channel, we use market geometry and we project it in either side. Whichever way the price is going, we can use market geometry to pinpoint the trajectoire, all right? Okay, the trajectoire of the price, all right? It makes sense? All right. So we are the GSTW24 traders talking about how to forecast, the end of the fifth Elliott wave like the Elliott wave expert. Happy trading to you all and speak to you soon.